Hi everyone, this is a technical analysis on GBPUSD. Let's start with some fundamental background first. In the US, the Fed hiked by 25 bps as expected and kept everything unchanged. Fetcher Powell reaffirmed the data dependency and kept all the options on the table. The US economic data keeps on surprising to the upside though, but inflation expectations and CPI readings continue to show disinflation, with the last two core CPI month-on-month figures coming in at 0.16%. The US PMI missed expectations across the board last week, while the US jobless claims remained solid. Fetcher Powell's speech at the Jackson Hole Symposium was mostly in line with what he said previously, but he stressed on the need to be careful going forward and that continued strength in the labor market may require further rate hikes. At the moment, the market doesn't expect another rate hike from the Fed, but the next NFP and CPI data will be crucial to confirm or change this view. Moving on to the UK, the BUE hiked by 25 bps as expected last meeting. The central bank seems to be leaning more on the less hawkish side, as a key line in the statement was tweaked to indicate the propensity for a higher for longer stance rather than keeping with additional rate hikes. Recent key economic data like the latest employment report showed even more wage growth, despite the unemployment rate ticking higher again, and the UK CPI beat expectations, pointing to stagflation. The UK PMIs missed expectations across the board, with the services sector plunging into contraction. The market expects the BOE to hike by 25 bps in September. Looking at the daily chart, we can see that GBPUSD has probed below the key support zone around the 125.93 level, but eventually turned around to get back above the level. The trend remains clearly bearish, as the price has been printing lower lows and lower highs, and the moving averages are crossed to the downside. We will need to see the pair rising above the 128 handle to confirm a new uptrend. On the 4-hour chart, we can see that GBP/USD has been stuck in a range between the 126 support and the 128 resistance for almost the entire month. Last week we got the breakout, but the pair moved quickly back within the range, leaving behind a fakeout. These are generally bullish signals, so we can expect the buyers piling in here and target the 128 resistance. On the 1-hour chart, we can see that we have the last lower high at the 126.54 level. The sellers are likely to step in there with a defined risk above the level and target another break below the support. The buyers, on the other hand, will need to break above the 126.54 level to change the bearish short-term trend into a bullish one and target the 128 resistance. This week is an important one given that we will see many key labor market for the US, including the NFP before the next FOMC meeting. Today we have the US consumer confidence and the US job openings reports. Tomorrow we will have the US IDP report. Moving on to Thursday, we will see the US jobless claims and the US PCE data. Finally, we conclude the week with the US NFP and the ISM manufacturing PMI on Friday. Although the Fed keeps all the options on the table, it's leaning more towards a pause in September, so we will need strong data to make the market to expect a hike at the upcoming meeting.